Now, Nigeria's economy grew by 6.18% in the second quarter, slower than the 6.56% recorded in the first and the 6.39% recorded in the corresponding period in 2012. Growth was stifled by a 1.15% contraction in the oil sector. The non-oil sector, however, grew 7.36% in the second quarter compared to 7.89% in the first. The telecom sector remained the fastest growing sector at 22%, albeit down from 24.5% in the first quarter. And joining me now to break down those numbers is Samir Gadio, emerging market strategist at Standard Bank, and of course he joins us on the line from London. Thank you so much, Samir, for joining us. So I guess it's a bit of a surprise, and the analyst I spoke to earlier today suggested we may see a number around 6.6. Do you think there's anything to be worried about given the slowdown we're seeing in the second quarter?
Hello, Wole. Yes, it is disappointing to some extent because this is the lowest growth rate that we've had since Q1 2009, and our expectation was that we would see a figure of around 6.7, maybe 6.8%. And as you said, basically it reflects a decline in the growth rate in both the oil sector and the non-oil sector.
Well, which sector worries you the most right now? Everyone knows the issues around the oil sector. It's all about the vandalization of oil installations and oil theft, and then of course the PIB that still remains stuck in Parliament. So are you worried about that sector more than what we are seeing in the non-oil area? Because clearly there is some pressure there as well.
I think the drop in the oil growth rate, which is now at minus 1.15%, was kind of expected because obviously oil production is at a relatively low level. I mean, we're now at around 1.85 million barrels per day of production.
Right.
And, you know, yes, we know that there is increased oil theft, and we know that there's been limited investment in oil and gas because the PIB hasn't been passed. So it's not really a surprise. But if you look at non-oil growth, what is striking actually is that the growth rate of the wholesale and retail trade sector actually declined to a new low of 7.4%, which we haven't seen for some time. And that's about 20% of GDP. And then you also had a decline in the growth rate of the telecom sector. I mean, it's still high, 22%, but it is clearly starting to decline, which I think is broadly in line with the fact that the sector has to flatten at some point. It cannot grow at 35% forever.
Right.
And there was also a deceleration in the manufacturing sector, actually, which expanded 6.8% from 8.4% previous quarter. But again, we know that there are meaningful infrastructure issues, power shortages, which can explain that to some extent.
But Samir, what's your outlook for growth going forward? Of course, I think what's historic about this last month was the handover of those power assets to new investors. So there is a sense that the biggest issue stifling growth, particularly for manufacturing, is being addressed right now. What's your outlook for GDP going forward?
Okay, I think in the medium term, there should be some support because actually, if you look at the base effects in agriculture, in the second half of 2012, there was a low growth rate below 4%. So that kind of supports the outlook for H2 13. But in the very long run, yes, you're right. Power is really the game changer in Nigeria's case. This is an economy which has large economies of scale, which could launch a light manufacturing sector, and that should be profitable. But it's not going to happen until you fix the power issue. And that will take some years, obviously. It's not something that's going to be fixed overnight.
Right. Okay.
But if it is, then growth could actually reach double digits eventually.
All right. I want to get your thoughts on the issue of monetary tightening in Nigeria. Of course, we have seen a tight monetary policy over the last 2 or 3 years, in fact. And give me your thoughts about the impact this is having on growth. I think there's a general view that the transmission mechanism is weak, but we're seeing at the current levels where interest rates are in the banking sector, I mean, many are now borrowing at close to 25%. So your thoughts on what impact this could have for growth going forward?
I think, as you said, the monetary transmission mechanism in Nigeria is weak. So this argument that you could actually lower policy rates and as a result boost economic growth doesn't really hold. So I think that at the next MPC, that's really not going to be the main priority. In fact, as you know, the exchange rate is under heavy pressure right now. So it's very difficult to imagine that the central bank will cut the MPR or start easing monetary policy in this kind of environment. So I think we're going to have further monetary tightening, or at least a tight monetary stance in the medium term.
Right. Okay. And if you're looking forward, what's the biggest risk for you? Right now, we're seeing the Naira coming under pressure. Looking at this economy, especially for people looking from outside in, foreign investors, what do you think is the big risk going forward?
Well, I mean, obviously, the big risk is that you have large capital outflows and the exchange rate then becomes unsustainable. But that's not really the case. I mean, so far, actually, the portfolio flows have been relatively balanced, very marginal, but I would say broadly balanced. So now the issue is that the central bank basically has to supply more FX in the market. And we haven't really seen the central bank acting aggressively in this regard. They would need to increase the level of WDAX sales, but also intervene more proactively in the interbank market and tighten liquidity further. That's, I think, the only way you could actually protect the currency. Whether the exchange rate is going to come back to 159 or 158, obviously that looks unlikely. However, I think it's probably possible to contain it in the 160 to 162 range.
Right. Well,